what we're going to talk about today is how to connect and meet with accredited investors. Of course, we're not doing it just to meet. The idea is to raise capital. So this is for startup founders, or if you're leading a syndicate, or for any other reason, if you have a business that reaches out to angels, that could be for you too. But most of you, I guess, are startup founders. And for that, we'll start talking about what angels want and different styles or interests when they invest. Then we'll talk a bit about how to choose the right angel investor to reach out to and how to do it. And finally, a quick and simple playbook on how to connect with angels on LinkedIn. Okay, just a few words about me. I think some of you already know me, and I've spoken with some of you, but for those who don't, I started Meet.Capital as an agency that came out of a startup. The startup was called Crowdfunding Guide. Didn't go very well, but Crowdfunding Guide was a platform, was supposed to be a new kind of equity crowdfunding platform. So we needed to onboard a lot of investors, specifically angel investors, and figured out that the best way to reach out to them and connect with them was on LinkedIn. And we started by just, without thinking about it too much, just reaching out to people on LinkedIn. And surprisingly, a lot of them responded, and then started tweaking that till it became a system. The startup did not survive, but the system did, and that became an agency. And that's how I started Meet.Capital. This is a screenshot of my sales navigator. I can say, of course, most of them are just people I've met on LinkedIn and never interacted with beyond that, but I've made great connections and great interactions with people that I've only met or initially met on LinkedIn. And some of them became very real connections that some of them I've met in real life afterwards. Some of them I've been meeting and been in touch with in years, actually, and started with LinkedIn DM. So what starts cold can become warm. And last week, I mentioned one of our new clients, a founder that got her first meeting with us. And the reason I was very excited for her is that she's a brilliant founder that she had a past exit. And when she started her company, she very quickly raised her pre-seed money, which was about $500,000 from a few angels and a couple of companies, not exactly corporates, but companies that invested in her and in her startup. But then she got stuck and plateaued. Before she reached out to me, she was using one of our lists, and she was getting nothing. Like, no one was responding. We met, we fixed up her message, most important, shortened her deck and created a short version of her deck to send to investors. And we started reaching out. She was reaching out on email. We used LinkedIn for her. She had a great meeting yesterday, which I don't know how it will end up, but the meeting went very well with a group of investors. That was one. And she has another meeting coming up next week, and there will be more. So from being ignored and staring at the abyss, she's now meeting investors. And that's what you can do when you reach out to investors on LinkedIn. Yeah, you miss 100% of the shots that you don't take. That's obvious, but you also have to aim and load your gun, meaning you have to have your story and your message nice and tight and neat. And you have to reach out to the right people. That's to aim. So first of all, just like a general thought about what do angel investors want. The first thing is very important is and we have to remember that we have to always assume that angels want a financial return on their investments. It's true that some angels have other interests. They want to make an impact. They want to get involved. They want to get back to entrepreneurship. They want to enjoy the excitement of a startup. All those things are there sometimes. But what is always there is the desire to make a return on their investment, because no one wants to lose their money, no matter how rich and successful they are. So first thing is they need to understand why investing in your startup is going to bring them a return. Second thing to know about angels is these are individuals, and individuals come in all shapes and forms and with all the craziness of being a human, and we need to be ready for that. angels have a limited capacity to run due diligence, which means that they want things validated. And they're looking for external sources of validation, meaning most angels will want to see someone else that invested. Of course, there are angels that will take the first move, but usually that comes with from a warm connection at first, and then reaching out cold to new investors usually works after there is someone that's already in there, because the others want to follow and they don't have the capacity to do full due diligence on their own, or many of them don't, at least. And as a general rule, we can assume that most angel investors, or I'd probably say all angel investors, are looking at the same core strengths to see in a startup as a VC or any investor in an early stage startup would, which what is the market opportunity? Why now? What is the strength of the team, and why is the team fit to bring this startup to success? What is the traction compared to the time that you're in existence? What is your competitive edge, or what are the moats that you have, such as patents, partnerships, databases, etc.? And of course, as I mentioned, capital already raised and the investors that are there. There are many ways to divide the kind of diverse group called angel investors, but here's one way to look at them and look at different types of investment styles, let's say. So one is the undeclared or occasional angel. This could be someone that was successful in any type of business or endeavor, and sometimes they invest. Maybe they invest because they really know one of the founders, or it's someone in their family. While these could be great investors, for instance, a professional athlete that invests in sports-related startups. These could be really great investors, but not very useful for us, because they're hard to find. And assuming someone will invest in a startup just because they seem rich and able to do it, or they seem like they come from the right industry or the right position, I don't think is a good strategy. But if you have a warm introduction to someone like that, by all means, that could be very useful. The next category is what I call super angels, or actually a lot of people call them super angels. These are angels that invest a lot, that made big exits. Sometimes these are people that were founders of very successful companies in the past. They're in a way similar to VCs because of the capacity that they operate in. They're also gated very often, meaning they have a team around them. All that to say is they could be excellent investors, but they're harder to reach without a warm introduction. Maybe worth trying, for sure, but just keep in mind that the chances of just reaching out to them out of nowhere and getting a good response in a meeting is somewhat lower, because a lot of people try to do the same. They're famous. The next type is the advisor angel. And maybe most angels are that way. Naturally, people that become angel investors often reach that after they've achieved something in their life, and they want to leverage their achievements, their experience, their knowledge by advising your startup. Now, this comes in a whole range of levels and types, from angel investors who expect to actually become part of the team, to angel investors that just want to be on the advisory board or advise or come as consultants or introduce others. And a good advisor angel could really, really help you, but a bad advisor angel could damage you in so many ways and waste your time. So here, I'd say proceed with caution. You really need references, and you need to understand. And before you give people more than their money's worth for their expertise and time, you need to make sure that they actually have that expertise and that they will do good work for you. The next, number 4, pure angel investors. In a way, those are the best. They These are people that have invested in startups, they've seen success, and they believe in startups as an investment class, and they want to invest, they want to put their money to work. They might invest smaller checks because they're trying to spread their bets across many startups. They can move very quickly. A lot of them prefer to work with syndicates, which we'll touch upon in a second, or groups, but many of them have different groups that they're participate in, different syndicates that they're in touch with, and sometimes also invest individually. And those are the ones that will also publish, let the world know that they're investors, so they can be found. And those are basically the ones that we're looking for. Then there are angels that invest through groups. Like I said, many angels invest through groups, but there's some angels that only invest through groups. Reaching out to them sometimes is not very useful because they don't really have any influence on whether the group invests or not. That's true, especially for the bigger groups, like, I don't know, Keiretsu. So in that case, if someone is a member of Keiretsu, probably reaching out to them because of that is not a good enough reason. However, they might also invest outside of that group. Yeah. But in smaller angel groups, actually, the fact that the angel is a member of a group could be an advantage, because in some groups, the members bring the deals to the group. So connecting with an angel from the group can actually open up the whole group to invest if things work out. Finally, there are angels who lead syndicates. That means that they call on other investors, other angel investors, to join them on their investment. They do the due diligence, they choose the opportunity, and then when it's done, they invite other angels to join, and they take a carry if the investment succeeds and brings a positive return. Those, of course, are great because these are professional angel investors, and they come with a bigger check because they bring the investments of the group with them. The only downside is they are harder to reach because more people approach them, and they go through a lot of deal flow, most of them, or the better ones. But of course, these are good angel investors to reach out to. Which brings us to the next part of our presentation: how to choose which angel investor to connect with. So first of all, this is kind of belongs to the next part, but as you might know, I'm a big believer in using LinkedIn, because on LinkedIn you can do the prospecting and the outreach and the messaging and follow up everything on the same platform. But also because angel investors, if they really invest in several startups, they might belong on boards of several startups, so they'll have emails from different companies, and sometimes they use their private Gmail for the actual interactions. So tracking them on email is harder, but on LinkedIn, you can find them and you can choose the right ones. Now, who are the right ones to reach out to on LinkedIn? First of all, the ones that define themselves as angel investors, or at least mention in their professional section on LinkedIn that they sit on boards and that they invest in startups. So they self-identify as angel investors, so it makes sense to reach out to them. Next, many angel investors are kind of generalists and look at any opportunity, but of course it's better to find someone that has at least some relevance to your domain and some experience, and the more relevant the experience the investor has, the better. Location, I've helped founders raise money from investors on the other side of the world just on Zoom calls. But if you can first find angels that are in your city and meet them for a coffee, that's of course a better starting. LinkedIn does not like connection requests between third-level connections. You can send an email if the person is not your second-level contact or first-level contact. But if you see an angel investor and you're thinking whether to reach out to them on LinkedIn, better go for those that are your second-level contacts, which means that you have at least one mutual connection. And of course, since we're using LinkedIn, we want people that actually use the platform. It's easy to check. You can look at their profile and see, do they? Okay, who to avoid? I mentioned members of big groups. Like if someone is only an investor in Keiretsu or I don't know, Angel Coast, Golden Coast, I forget their name, maybe not a great fit. If the only reason that you think that they're an angel investor is that they invested in one startup 5 or 10 years ago, that might be, their cousin's startup or something. It's not a strong enough indication. It's better than nothing, but you can probably find a better match. Then angels that aren't actually investors or not investors right now, for instance, if they have an open to work badge on their profile, or if they're presenting themselves mainly as some coach or consultant, that means that that's their main agenda now. Doesn't mean that they don't also invest, but you have to understand what the person is actually interested in doing. And lastly, anyone that you just feel for whatever reason uncomfortable. It could be just that you don't like the way they look. It doesn't matter, but I don't think it's worth even trying. There are a lot of angel investors that you can reach out to on LinkedIn. And I believe in going with your gut feeling as a general rule. Okay. A simple playbook to connect with angels on LinkedIn. It's really a simple playbook. You find the right angel investor, which we discussed. You can also start with a list or some of the lists that we give, and find someone that's relevant to you and send them a blank connection request. Now, why a blank connection request and not a message immediately? First of all, to save your time and energy. Secondly, people accept those at a higher rate, and we've tested that many times. So a blank connection request is more likely to get accepted. But most importantly, a blank connection request is the right way to go because it is all that is needed if your profile is set up correctly, and especially your headline. So the headline of your LinkedIn profile should clearly reflect what you're doing and the fact that you are a founder in an exciting startup. And if your headline says founder in exciting startup at disrupting whatever industry, and you reach out to an angel that is connected to that industry and they don't accept, then the chances of convincing them with the message is close to zero. Because if they are actually interested in startups and they're interested in your industry, they will accept your connection request. So that is just a good way to know who is the right fit for you. And it just makes things much faster. It's not only the time that it takes, it's also the emotional energy that's required in reaching out. It is difficult to reach out to people again and again, especially when some of them ignore, some of them decline. So being efficient about it really helps and helps you do it at scale. If they accept the connection request, then we send them a message. The message has to be brief, concise, no fluff, polite, and no big ask either. So we're not asking for a call right from the first message. We're not sending them to a link on the first message. We're not asking them to read a very long explanation about what we do. That's also an ask. People have a very, very short attention span when they're online. And I think we've become with a short attention span even outside the online world. But definitely when we're online, all of us have a short attention span. Brief message, would you be interested in learning more? If the person is interested, then we can send them more information and then we can invite them for a call. Then it is legit, that it's not too pushy. If we're just reaching out of the blue and immediately asking them to do something, in my mind, that's too much. You might have a different style. For me, that's just too much. One follow-up a few days later should be enough. If you have something important to say or an update, you can follow up later. But if it's good to keep track of who you reached out to and then follow up when there's actually something new to reach out about. If you do too many follow-ups right up front and you don't get a response, it becomes awkward to follow up later. So one message and one follow-up, I think, is more than enough. The most important part is to just keep going. Repeat, let's say 10 connection requests a day is a good number, 15, not more than 20 because LinkedIn won't allow it, but 10 to 15 is a good number. Even if you do 5, just do it repeatedly, and eventually you will get people to connect with you, to meet you, and if you have the right offer for them, to invest in you. That is it. That's the whole playbook, and it works. I really encourage you to, if you haven't been doing it already, to start. What is to start? Run a search on LinkedIn, find angels that are relevant to you, if that's what you're looking for now, and send them connection requests. And then if they respond, accept, then you can continue and take it from there. It's not so hard to do, and it's worth your while. You don't know what opportunity will be open from that. I also encourage you to do it, even though it is summer. Peter, you asked about that last time. I'll just say it again. Summer, you'll get less responses. Everything, the number of responses you'll get is lower, but you'll still get some. And any meeting is worth a lot because it could change the whole life of your startup. So it's worth the effort. And also sometimes people will respond in a delay. Last year, one of our clients had a brief interaction with an investor just in the beginning of summer. Person went on vacation, came back, had a meeting with the founder, and gave her a check of $150,000. So it was well worth the effort of reaching out, even though it wasn't the greatest timing. But in that case, it was worth it. And I think it's worth trying for sure. Okay, before I get to talk a bit about the course, I'd like to hear your questions.